Good morning, student. It's video number 6 about the topic preparation of partners capital account. To prepare partners capital account, we have two methods. Method 1 is called fluctuating capital method and method 2 is called fixed capital method. See, under the fluctuating capital method, we prepare only a single account, that is called partners capital account, and under the fixed capital method, we prepare two accounts. One is called partners capital account and another is called partners current account. Fine. Now see, as the name suggests, fluctuating capital method. So under this method, the capital of the partners will not remain same. The capital of the partner will fluctuate. It means their opening capital will not be equal to the closing capital. Means whatever will be their opening capital will not be their closing capital. It means their closing capital will be more or less. Why? Because their capital will fluctuate under this method. And under the fixed capital method, as the name suggests, the capital of the partner will remain almost fixed. Means whatever will be their opening capital will almost remain same as their closing capital. Fine. How it happens, I will explain later when I will discuss these methods in detail. Fine. So students, firstly we are discussing first method, fluctuating capital method. As I told you, under this method only single account is prepared with the name partners capital account. See, it is debit side and right side is called credit side. I have assumed there are two partners A and B, so I have made two columns on both sides, A B, A debit column of A and similarly credit column of A, similarly debit column of B and credit column of B. If suppose there are three partners, so you will prepare three columns on both sides, A, B, C. Similarly on credit side also A, B, C. You will prepare three columns on both sides if partners are three. Fine. I have assumed there are only two partners whose names are A partner and B partner. So see, on credit side which items we record. To clarify it, be very clear about the thing that capital, where you see the capital in balance sheet, sir, liability side. So capital is a liability, you all know. Fine. And all liabilities have credit balance. Fine. Capital is a liability, that is why it has credit balance. So opening balance of capital will be recorded on credit side because capital has a credit balance. So we will record opening balance on credit side with the name by balance brought down. Fine. By balance brought down. A's balance will be written in A's column and B's balance will be written in B's column. Now when additional capital is contributed by any partner, it will also be recorded on credit side with the name by cash or bank. See, additional capital contributed will increase the capital of the partner, so it will be recorded in credit side. Fine. Capital has credit balance. To increase the capital, we will record items on credit side, and to decrease the capital, we will go opposite to its nature. Its nature is credit, and to reduce the capital, we will post items on debit side. So whenever we are posting items on debit side of capital account, it will reduce the capital, and if we are posting items on credit side of the capital account, it means it is increasing the capital. Fine. See the third item, by salary or commission. This is about the salary or commission of the partner. Fine. Salary or commission of the partner is also recorded on credit side of the partner's capital account. Why? Remember, simplest thing, that anything payable by the firm to the partner is not paid in cash. Anything payable to the partners by the firm is not paid in cash. So how firm pays the amount to the partner. Simply, firm increases the liability of the partner. Increases the liability. Liability means increases the capital of the partner. And to increase the capital of the partner, as I told you, it will be recorded on credit side. So salary to any partner or commission to any partner will increase the capital of the partner. Fine. Similarly, interest on capital is also not paid in cash to the partners by the firm. It is also added to the capital of the partners. Fine. And last one thing I have written by P&L appropriation account bracket profit. That is simplest. We learnt in 11th class that the profit is added to the capital. That is why I have written on profit on credit side. Credit side means adding. Fine. Now see what items we have written on debit side. On debit side we have written first item drawing. As you know, drawing reduce the capital, so we will record it on debit side. Debit side items will reduce the capital. So two drawing. Again two drawing. I have written drawings two times. Why? Because drawings are of two types. Number one is called drawing against capital and another drawing is called drawing against profit. Fine. What is drawing against capital and what is drawing against profit? We will discuss these two types of drawings later in the interest on drawing topic. Fine. So whether it is capital drawing or whether it is drawing against profit will be recorded on debit side with the name two drawing. Fine. Apart from this, on debit side we will also record interest on drawing. See, as I told you, anything payable to the partner is not paid in cash. Instead, their capital is increased. Fine. Similarly, anything to be taken from the partner, interest on drawing is to be taken by the firm from the partners. So anything to be taken from the partner is not taken in cash. Instead, capital of the partner is reduced. Fine. To reduce the capital of the partner, we record on debit side. So interest on drawing is, that is why recorded on debit side. Fine. Apart from this, last one item is loss. As I told you, profit is recorded on credit side because it is added to the capital. Similarly, loss will be recorded on debit side. Loss is to be deducted from the capital, that is why it is to be recorded on debit side. So two side we will write to P&L appropriation account bracket loss. Fine. So this was all about the partners capital account. Now you may have some queries that, sir, do we record any else items apart from these? Yes, there are so many items which we record on in capital account of the partners. That will be discussed in next chapters. Fine. In this chapter you have to learn only these items. Fine. And at the end, this account will be closed by balancing and you will generally get a balance on two side. So you will write to balance carried down balancing figure. A's balance in A's column and B's balance in B's column, and at the end this account will be closed by totaling. Fine. Total, close, total and close. Now I told you most of the logics, why these items are recorded on credit side and why these items are recorded on debit side. Apart from this, you can also learn from the P&L appropriation account. See, whatever item was recorded on debit side of the P&L appropriation account, this is P&L appropriation account, we have already learned. See, In P&L appropriation account, we record interest on capital on two sides. So we write two interest on capital A, B. See here the name of partner comes A, B. So it will be recorded on cross side of A. It will be recorded on cross side of A's capital account. So in A's capital account we record on cross side. Cross side will be buy side. So buy side we have written buy interest on capital. Similarly, in P&L appropriation account we record salary commission on two side. So it will be cross posted in capital account of A and B buy side, buy salary and commission. Fine. See one more thing. In P&L appropriation account we recorded the remaining profit on two side to profit A, B. Here again the name of the partner comes. Whenever the name of the partner comes, it will be cross posted to the capital account or current account of the partner. So we will record on opposite side, that is buy side, buy P&L appropriation account profit. Fine. Similarly, interest on drawing was recorded on credit side in P&L appropriation account. By interest on drawing we wrote in P&L appropriation account. Again name of the partner comes A, B. So it will be cross posted in a partner's capital account. Which side? Sir, two side. Yeah, sure. So two side we write two interest on drawing. Fine. And at last I will definitely tell, as I promised you, that sir, why this method is called fluctuating capital method. So you can observe in the beginning the capital was whatever, assume 1 lakh. So after doing so many adjustments, their closing capital will not be 1 lakh na. Their capital will be more or less. It means under this method we do many adjustments in a single account, so the capital of the partner will fluctuate. Whatever was the in the beginning will not be equal to the whatever in the closing. It means after doing so many adjustments, the capital of the partners, the closing capital of the partners will fluctuate. Fine. So students, we are going to discuss second method, that is fixed capital method. As I told you, under this method two accounts are made. Number one called partners capital account, and one more account is made under this method, that is partners current account. Now see, remember I told you, as the name suggests, a fixed capital method. Under this method the capital of the partners will remain almost fixed. How it remains almost fixed? Simply because we don't do any miscellaneous adjustment in the partners capital account. For all the miscellaneous adjustments we have prepared a separate account. All the miscellaneous adjustments we will do in the current account. So when we do miscellaneous adjustments in the current account instead of capital account, it means the capital of the partner will remain almost fixed. How? Let's see. See, in partners capital account we record their opening balance, and as I told you, opening balance has credit balance. So on credit side we will write by balance brought down, A and B's. Fine. And what else item we record on credit side in partners capital account? Additional capital. If partner introduces additional capital, it will increase the capital of the partner, and as I told you, to increase the capital of the partner we will record on credit side with the name by cash or bank. Additional capital. Fine. Additional capital is recorded on credit side. Apart from these two items, nothing will be recorded on credit side. And what thing is to be recorded on debit side? On debit side only one thing is to be recorded: drawing. Now see, I told you there are two types of drawing. So which drawing I am talking about here is a drawing against capital. If a partner withdraws any amount from his capital, then that will be recorded in partner's capital account. Fine. And sir, what about the second type of drawing, which is drawing against profit? But a drawing against profit will be recorded in current account. So drawing against profit will be recorded in current account on debit side. Two drawing. Which one? Against profit wali. Clear? So come back to the partner's capital account. Only these items will be recorded in partner's capital account under fixed capital method. At the end we will balance the capital account, and balance will generally come on two sides to balance carried down balancing figure, A's balance and B's balance, and at the end this account will be totaled and closed. Total, close, total and close. Fine. Okay, now have you understood that why we call it a fixed capital method? Simply because we do only limited adjustments in the capital account, and remaining miscellaneous adjustments, miscellaneous items will be posted in current account. So you can see the closing capital of the partner will remain almost fixed, almost non-fluctuated, almost fixed, because we have not done any miscellaneous adjustments in the capital account. Fine. So see, whatever items are left will be recorded in current account. In current account you may have given opening balance. So opening balance of current account will be recorded on credit side by balance brought down. A's balance in A's column and B's balance in B's column. And apart from the opening balance, what items we will record on credit side? As I told you, anything which will increase the liability will be recorded on credit side, anything which will decrease the liability will be recorded on debit side. Fine. So salary, sir, salary to partner increases the liability towards the partner, so will be recorded on credit side of current account by salary. Similarly, commission will also be recorded on credit side. Fine. Apart from this, interest on capital also increases liability towards the partner, so interest on capital will also be recorded on credit side, and share of profit will also be recorded on credit side with the name by P&L appropriation account bracket profit. Fine. And what items are to be recorded on debit side? First one I already told you, drawing against profit will be recorded in current account on debit side. And one more item is left, that is interest on drawing. Interest on drawing reduces the liability towards a partner, so it will be recorded on debit side with the name to interest on drawings. Fine. Now see, profit is recorded on credit side. Suppose if we had a loss, then it will be recorded on debit side, because loss reduces the liability towards the partner. It will be recorded on debit side to P&L appropriation account bracket loss. Fine. And at the end this account will also be balanced by writing to balance carried down balancing figure. Fine. And at the end this will be totaled and closed. total close. Fine. So you can see why this method is called fixed capital method. Simply because, sir, we do miscellaneous adjustments in current account instead of doing in capital account. So when we will not do miscellaneous adjustment in capital account, it means the capital of the partner will remain almost same, will remain almost unchanged, will remain almost fixed. Fine.